No matter how you feel about Bill Gates, there's one thing you have to give him credit for. The man has many brains and knows his way around a business or an investment. Gates became friends with Warren Buffett as a young man and, inspired by Buffett's investment framework of buying good quality businesses at attractive prices, Gates has been taking advantage of the stock market's decline over the past year to increase his stock holdings. We can't see the stocks he's buying for himself, but he is required by law to tell us about the stocks he's investing in for the company. In the past 12 months, he has made 13 stock purchases through the trust at the Bill and Melinda Gates Foundation. However, only 5 of these purchases have represented a sizable portion of his portfolio. Welcome to Market Empire. Let us dive into the 5 purchases of Bill Gates. Stock 1, worth 26.3% of Microsoft. His biggest holding was in the company he founded himself, and he keeps reinvesting in it even now. He is reinvesting in Microsoft stock, which he sold during the dot-com bust of the late 1990s. Even though he's up $239,000, he's reinvesting his profits in the stock at the current price. To this day, Bill Gates remains an enthusiastic supporter of Microsoft. Even though Bill Gates handpicked Michael Larson to serve as the trust's chief investment officer, likely, the billionaires regularly discuss and debate which investments to make. Microsoft, the world's second-largest company by market capitalization, has taken a hit this year along with the rest of the stock market. Even though the share price has dropped from $336 to $240, the stock still has a dividend yield of 1.1% and a price-to-earnings ratio of 25. The Gates Trust is buying Microsoft now because the price is low. Still, the company's underlying fundamentals are strong, even though Microsoft's revenue and earnings have grown yearly despite the pandemic. Stock 2, worth 14.2% of CN Railway. His second-largest purchase was also relatively recent. He continued to increase his holdings in Canadian National Railway, a stock he has held for a long time, widely regarded as a classic example of traditional value investing. They've been around since 1919, and their original business model of transporting goods across North America was foolproof. Providing essential goods to keep the economy running is a low-competition industry. Since CN has already built 20,000 miles of track across 3 coasts, they are not likely to lose business in the near future. Currently trading at around $160 per share, the company has a P/E ratio of 22, a dividend yield of 1.8%, and a market cap slightly smaller than Microsoft's. However, when looking at revenue and earnings, the picture is not as impressive as Microsoft's. Their earnings and revenue growth have both been minimal. Stock 3, worth 9.3% of Berkshire Hathaway. The story goes that Gates and Buffett have been friends since their first meeting in 1991, when they couldn't stop talking about business. Both happened to jot down at the same time that focus was the single most important factor in their respective businesses' success. He founded Microsoft, the world's second-largest company, and currently ranks number 6 behind only Buffett's Berkshire Hathaway in market capitalization. Even though Bill Gates considers Warren Buffett a friend, Gates also recognizes Buffett as a financial genius. That's probably why he's a shareholder in Buffett's Berkshire Hathaway company in the first place. It was his third-largest purchase this year, accounting for 9.3% of his portfolio, and it is now his second-largest position, accounting for 23.3%. With Warren Buffett and Charlie Munger at the helm, Berkshire Hathaway has consistently ranked among my favorite stocks. Buffett and Munger are 2 of the most successful investors of all time, and they have amassed a remarkable portfolio of companies they have either acquired outright or in which they hold a significant stake. Let's say they're in charge, and they're going to invest in stocks whenever they see fit in the future. The exciting thing about Berkshire is that, at least for now, it has been a stock that hasn't gone down over the past year, which is why Gates was smart to buy it a long time ago and why he is still accumulating it today. Compared to its price of $299 per share a year ago, today's selling price of $309 represents a growth of 3%. That Berkshire Hathaway does well in market downturns is a testament to the value of investing in stocks of companies with proven track records of success. Falsely declare a dividend, as everyone knows. Don't put too much stock in that ratio. Warren Buffett is skeptical of the company despite its size, $680 billion market cap. It is skewed higher due to an irregular net investment income that they had to write off this year. Realistically, if you're an intelligent analyst, you should pay more attention to the forward PE of 21, which is more accurate for how their earnings are overall. It's still a good quality company selling for a decent enough price for Gates to keep buying. Stock 4, worth 7.8% of Waste Management. Stock in Waste Management is another company that Gates simply likes to accumulate. Waste Management is a North American company that provides services to nearly 21 million customers in the United States and Canada, and it is not a pretty business, it is pretty ugly, or maybe you could say that without it. The country would be pretty ugly, and that is because Waste Management disposes of waste. It's a successful company that provides a much-needed service to both the American and Canadian economies. Even in a down economy, people will still need garbage collection services, so this industry is here to stay. Let's analyze Waste Management's financial performance. One more stock that has held up well despite the market decline. It costs roughly the same as it did a year ago. It has a relatively high PE ratio of 29, as well as a similar price to the free cash flow ratio of 33, and, like most Gates stocks, it pays a small dividend. Stock 5, worth 3% of DEERE & Company. DEERE & Company, now worth 3% of Gates' total portfolio, was the last stock of any real significance that he purchased. The stock price has risen over the past year because the company is tedious but has a stable and easy-to-understand business model. It makes useful outdoor equipment like tractors, lawnmowers, construction machinery, and agricultural machinery used in the forest. With a total of 180 from the market, the price has increased from $342 to $428. We don't know how Gates found these stocks that did so well in 2022. Still, aside from Microsoft, most of his other investments have held their value, so whether Larson is doing most of the investing or Gates is managing things, the style for the Gates Trust is to buy quite conservative businesses. Stocks like Microsoft and Berkshire and Canadian National Railway have been around for quite some time. They are tried and proper methods of conducting business. Regardless of how many recessions may come and go, they will continue to sell the same products to the same customers. Having invested in such high-quality businesses, he can rest easy knowing that his financial future is secure regardless of the state of the economy. Well, that is it for today's video. Thank you for watching. Leave your comments down. Please hit the like button, share this video with your friends, subscribe to the channel, and hit the bell to be notified when we upload new videos to Market Empire.